Hi, it's Richard Hemming, founder of Under the Radar Report. It is great to be back once again with the markets trading near record highs. Well, what happened last time? Last time we were near record highs. Trump threw a tariff spanner in the works and everything went mayhem. People sold out, holders, bowlers. What was the correct strategy? The correct strategy was keep calm and carry on investing. It's one of the many catch cries we have here at Under the Radar Report. Regular listeners will be familiar with them. And I'm going to come to some more catch cries, but simply take it stock by stock. Take it stock by stock, taking profits when when you're happy with the gains you've made, seeking value, hunting for value, being opportunistic when there's quality on offer. This is what we do at Under the Radar Report. This is the secret to making money. So taking advantage of calmer periods is the key here. It's the key because you don't want to be reacting. You want to be not having to make decisions, when the Bunsen burner's under your proverbial. You want to be ahead of the curve. So this is why we encourage our members to do a Finance Friday. Always do a Finance Friday and you'll be well ahead of the curve. That's one of the things we do. The way to make money from the stock market is buying when expectations are low. It's not complicated. Buying when expectations are low. Basically, you're taking advantage of investor impatience. You're taking advantage of investor impatience. So, of course, there can also be secular themes you've got to take it into account. But investing does involve a lot of hard work. That's why we exist. But if you pay a low enough price, you're more likely to do much better than other investors. You're more likely to make really big returns if you pay a low enough price. So that's what our best stocks to buy now is about. Looking at the stocks that we regard as being the best bang for your buck. Stocks with the greatest potential for the current price you're paying now. And how have they gone? Well, I'm happy to announce that 3 of them got 15% plus gains in the past week. Hansen Technologies, Macquarie Technology, and Rare Earth producer Linus. So Linus is a classic example of a stock being in the right place at the right time. But it was experiencing considerable time in the doldrums, which allowed our members to get positioned in the stock, which we still think is really good value. But that's the key. You've got to be there. You've got to be doing your homework well in advance. So that gives you a reasonable head start well before, say, a certain macro thing like rare earths, which are used for batteries, which are used to produce magnets for batteries, well before the interest reaches, a tipping point where everyone just piles into it. That's what we're about. We're being ahead of the curve. Likewise in uranium stocks. Well, the uranium theme's been around for a long time, but it ebbs and flows. These are boom bust scenarios. So US government said, okay, nuclear is going to be a big part of our future. Similarly, AI are really backing nuclear to provide that low cost baseload power that they so need. So nuclear, while it's a bit off at the moment, there's opportunities to get in. So what you need to have is a head start in knowing who are the good guns, who are the also rans, so that you can position your portfolio for when things take off. So we constantly have been talking about nuclear. We've constantly been talking about rare earths in our publications for a long time now. Subscribers will know this. And part of the edge is taking advantage of when the interest isn't hot. So that's what we're about. We're about preparing the ground, so to speak, because these are boom and bust cycles. You don't want to be chasing a boom. You don't want to be chasing a boom. You want to be investing ahead of the curve. In the same way, you don't want to be chasing the market. You don't want to be chasing a CBA. You don't want to be chasing a Telstra. You don't want to be chasing a Wesfarmers. You don't want to be chasing a Nvidia. You don't want to be chasing these stocks that are driving the market to record highs. You don't want to be chasing market-linked ETFs. And making money simply means buying cheap and being patient. That is the key, buying cheap and being patient. Easier said than done. You need to have done the hard work. That's why we exist. But we're there to generate for you consistent double-digit returns. We do it in our funds. You can do it too. Great being back. Looking forward to talking to you next time.